Hey you guys, welcome to my channel, Budgeting My Abundance. I am the Abundant Mama, and this is the channel where I am documenting my journey to becoming financially free and living a more financially independent life. And I share with you the tips and tidbits that I learned along the way. So if this is something that might seem interesting to you, then go ahead and hit that like and subscribe button, as well as that notification bell, so that way you are notified every time a new video is uploaded, and we can go ahead and take this journey together. So you guys, I am so excited because we are finally going to be discussing custodial accounts, which are IRA accounts for kids. Yay! Okay, so that excites me because I want one for my son, but I think I'm gonna have to wait on that. And you're gonna find out why later on in the video. But first things first, we are in, or at least we're going to be starting week 11 for the BCL movement. So week 11 starts on July 31st, that's Sunday, and is going to be all the way through August 6th. If y'all want information more about like the BCL movement, follow Budgeting April. She is the lady who created this movement, and it's basically a movement where we are supporting other budgeters. We do that by watching their channels, by subscribing to their channels, by watching their playlists, by going to their Etsy stores, and basically just supporting them. Now, another thing is Budgeting April is actually a part of another movement, which is called I Am. And I Am is this movement where basically you just get to choose what you want to make a video about and just put I Am with it, and then like you get to help other people. Because I know with Budgeting April, she does I Am, and it's with cooking, so it's like meal prep and meal planning, and like, you know, how to cook on a budget. I know there's someone else in there doing like entrepreneurship, and I actually should probably look into that because Lord knows I need it. But as for the BCL budgeters for the week, they are Fire Wife Savings Life, Money Making Moves, 40 Plus Life, and Happy Mail Fairy. And I can't wait to watch Happy Mail Fairy just because of the name. That just saying the name makes me happy. Like Happy Mail Fairy, come on now. So go ahead and support their channels. Just do it. You'll like it. Just do it. So getting back to our cash stuffing as well as the investor series, because this is what this is, part of the investor series. It's custodial Roth IRAs, and I'm going to be cash stuffing $829 today. Actually a little less because y'all already know the drill. I went and got gas while I was at the bank, so. But let me go ahead and get this together. Probably doing backwards because I know ones. How was everybody's week? I don't know. This was a very weird week for me. At least it felt it. This was like the week moved fast, but then it moves painstakingly slow at the same time. And I think it's because like my own excitement. When I tell y'all, I like got all my notes together for this video because I was so excited about doing it. I could not wait till today so I can actually discuss it with you guys. So for the most part, my week went by, I guess, pretty decent. I was just really impatient because I wanted to like record this and just get this information out here. So I'm pretty sure other people can relate to that. So that is, there we go. So you can kind of see some of it. All right. So basically, a kid's IRA account, they can definitely help your child, your grandchild save for retirement, for their first home or educational expenses. You have the option to use a traditional IRA as well as a Roth IRA, although most people tend to prefer the Roth IRA for their children. Basically, any child, no matter the age, can contribute to their funds as long as they have some form of earned income. And what's her name? I'm gonna put her name in a thing because I talk to her all the time and I cannot think of her name right now. But she has one for her child, and I actually hit her up regarding the IRA, like her custodial account for her kid, and she said that like her daughter used to do child modeling or baby modeling, and that's how she was able to do that. But like once she stopped, then she had to stop putting it in because it has to be like money that they earned. But let's go ahead and start stuffing too. And so for my car, that's transportation, that's going to get $145. So here's 100, 20, 40, and 5. That's 100, 200, 2, 4, 6, 8, 85, 86, 87, 88, 89. And that is going to go into my month ahead fund for this car because August is already paid for. So this is basically for September. Just mark this down. And my phone bill went up because, of course, you guys know I purchased a new phone. So when you're financing a phone, it does bring your phone bill up by a little bit. So I'm going to be adding $42 to my phone bill. So it's 2, 4, or 44, I'm sorry. Where did I get 42 from? 1, 2, 3. Oh, here we go. 1, 2, 3, 4. 2, 4, 6, 7. 71, 72, 73, 74, 75, 76, 77, 78, 79, 80. And that should be, yeah, that should be enough, honestly. So I think I actually have just a little bit over, but I'm gonna hold on to that. Car insurance is gonna get 130. So here's 100, 20, and 30. Okay, so basically the Roth IRA for your child is called a custodial account. And it's basically a financial account that is opened and controlled by somebody over the age of 18 years old for a minor. A lot of times a custodial account is opened by a parent or for their child or grandparents or other family members. And sometimes it can even be friends that can open a custodial account for a minor. There are two types. One is the Uniform Gift to Minors Act, that is called UGMA, and the other one is called the Uniform Transfer to Minors Act, UTMA. And the biggest difference between these two is that the UTMA covers more assets. So with a UGMA account, you can include assets like stocks and bonds and mutual funds, but with a UTMA account, and pay attention to this, you can include assets like real estate. That's important. That's a big one. You can also include jewelry and art, but like for my baby, I think when we're ready, I'm definitely gonna do a UTMA, because if you can start including real estate, I know like a couple of years ago, not even a couple of years ago, like last year, they had parents that were buying land for their children. That's a great idea. So that's where my mind goes. I'm definitely going to be using a UTMA for my child. Now, the custodial accounts can be saving or investments accounts, and they're usually held in a bank or by like a brokerage or some type of financial institution. And basically, once your child turns 18 or 25, because they have a range, it can be between 18 up to 25, is when they can take over ownership, and then they can control that account. Now, here's a little side note. When it comes to custodial accounts, you want to look for ones that do not charge for account fees, and they don't have like a required minimum initial deposit. And also you want to look for one that allows fractional shares. Okay, so next I'm gonna add $150. Well, back to cash stuff. I'm gonna add $150 to daycare. And I'm not even gonna count this. I'm just gonna put that in order because this is more of like a revolving thing. Daycare gets paid every week. I just stuff for 2 weeks worth. And then next is the credit card, and that's gonna get $45. So here we go, 45. And y'all gonna have to bear with me because I took like 6 pages worth of notes for and y'all see this because I'm stuffing. I didn't even realize if I'm like out of frame or not. Oh, and I didn't create an envelope for it, but I am helping. It's like, since I'm living in a family home, I'm helping out, and I added Intergy. If you saw my last video, where I did like my budgeting short, I added Intergy to it. Wait, hold up, who wrote on this? Y'all see this? I'm gonna just put this here, and this is gonna go for Intergy until I can get like another envelope. If that's Intergy. So $50 for that. But yeah, I took like 6 pages worth of notes. Okay, and I think that's it actually. So I'm gonna go ahead and close this one. Okay, now back to the IRAs. There are basically 2 different types, like I said, of IRAs that are suitable for children. One of them is the Roth, and the other one is the traditional. I'm really not gonna go over traditional as much because I'm kind of leaning more towards the Roth. Mainly because like with a Roth IRA, you pay your taxes when you put the money into your account. So the funds, basically your contributions and the earnings, they're considered after tax money. So they're not taxed when you pull them out. Because let's face it, you want to use that if you feel like you're going to be in a higher tax bracket by the time you retire, and hopefully your child is by the time they're ready to retire. So that money is gonna grow tax-free, whether it's now the money from that custodial IRA is gonna grow tax-free, whether it's a traditional or a Roth IRA. But the benefit of the Roth is, you know, once your child pulls it out, it's tax-free. Take that with a grain of salt because, let's face it, my kid ain't even 2 yet, so who knows what the law is gonna be by the time he's old enough to retire. Oh, and then also, even if you claim your child as a dependent, they may be required to file an income tax of their own if the gross income goes past a certain amount set by the IRS. So like if they earned a certain amount for like a little summer job or whatever, then they may have to file, their taxes. So side note. Okay. Oh no, I actually wanted to get started on my wallet. So let's see. I actually have some rollover money, and I think that may be it. No, I have more. Okay, so I think we're gonna roll over this. All right, so roll over these ones, and it's 5. They're gonna go into the $1 challenge and the $5 challenge. And then we can go ahead and fill the wallet. So for my wallet, I already put 40 in my tank. So I'm just gonna put another 40 for gas. And for once, 40 actually filled my entire tank. I am so glad that gas is going back down. I actually took a picture of it. It was like, when was the last time I seen a full tank? Groceries is gonna get 25. Wait. I may have to make change. I think I may not have done this right. I don't think I did my, oh, I know what I did. Let me see. Let me go ahead and make change. I'm gonna have to make change because I did something. I'll do that later. But groceries, gas is supposed to get 40. Groceries is getting 25. Originally, I wrote my denominations, so I was gonna put 80 for gas, and I did it where it was supposed to get a 50 and then a 20 and a 10. And because I was at the gas station, I really was not thinking. I just grabbed 2 20s. So I threw that off. Okay, so those are done. Oh, no, it's not, because I have to do $5 for my miscellaneous. There we go. Okay, so going back, there are some advantages to having an IRA for your kids. Now, granted, most kids don't earn enough money to benefit from like the upfront like tax deduction associated with a traditional IRA or with traditional IRAs in general. So, you know, it makes more sense to do a Roth IRA. And then most people tend to choose those for minors because they have limited to low income. And if you're, even if your child wanted to like use the funds earlier than when they're, you know, 65 and a half, the account will still be advantageous, sorry. I don't know why I'm repeating the same thing, y'all. Now to open an IRA for a child, by law, banks, brokers, and investment companies are required, they require custodial or guardian accounts for your child under the age of 18 in most states. In some states, it's under the age of 19 or 21. As the custodian, you, the parent, the adult, control the assets in the IRA, making all the investment decisions until your child reaches the majority age, and that's when it's turned over to them. The opening amount to invest may be less than the brokerage's usual minimum, and the IRA is opened in your child's name, and then you have to provide their social security number when you open that account. Now, granted, not all financial institutions do custodial IRAs, so you do need to do your research. To fund it, your child can contribute to that IRA if they have an earned income from like a job, be it like from an employer. So like, I mean, I don't know who still reads the newspaper. So like if they had a newspaper route, or like if they do like lifeguarding work at a pool or what have you, or if they have like their little own business. So like, honestly, you know how they have like the Lemonade Entrepreneurial Sale Day for kids? That's a great day to be like, this is their little entrepreneur thing. They sold this much. Put that in the IRA for them. Let me see. So as of now, the maximum that your child can contribute to that IRA, whether it's traditional or Roth, is less than $6,000. I think the limit is just $6,000. And it has to be their taxable earnings for that year. So if your child made like $3,000, then they can contribute up to $3,000 in an IRA. If they made $10,000 for their little side hustle or whatever, then they are only allowed to contribute $6,000 for that year. If your child doesn't make any money at all, then they can't contribute any money at all. It has to be earned income. And you cannot like qualify chores as earned income. Like it has to be it can't be money from an allowance or investments or something like that. So ideally you want your child to have some type of side gig where they can get like a W-2 or a Form 1099 for the work that they've done. But even if it's like babysitting, or they have like their own little like lawn care business, or it's something I saw on Facebook where they had this kid, he actually did it was trash cans cleaning, he had his little business and he charged $10 he charged $10 to his neighbors to take their trash cans from the curb and pull them back to the house. And if they wanted it cleaned, and I think it was like $20, and he would just charge them to clean it. He would bleach it, scrub it out clean, do all that. And if he gets it, like if they give him that cash, if he, like, the parent or somebody writes a receipt saying, you know, here's a receipt for the service or whatever, then that's proof that that's his own little job, and that all the money that he earned doing that business, he can throw towards an IRA account. So on the receipt, it should have like the type of work, when that work was done, who the work was done for, and how much that that child was paid for that work. Again, that money cannot be an allowance. And even if you have your, say for example, you're an entrepreneur, have them work at your job. Have them do some type of job that makes sense for a child their age. Like your child can't be 3 and you got them as like a file clerk or something. That's not gonna work. So you can have them being like a little receptionist, not the 3-year-old, but you can have them like answering the phones, taking messages or whatever. If you have a teenager, they know all the social media apps. Have them help you with like promoting your business on social media. Have them be like your marketing person, a marketing assistant. It's a good thing. That's a good way to do it. And just like all the other IRAs, certain forms of income are not eligible for the custodial. So it can't be like rental income or other profits from property maintenance. It cannot be interest income, pension or annuity income, no income from like dividends or capital gains, and it cannot be passive income earned from a partnership in which, you know, they don't provide substantial services. Okay, so we're gonna move on to, that was a lot. So we're just gonna go on to savings. Savings, originally in my budgeting video, I said I was gonna do 50. I'm actually gonna do 45. Because let's see, I'll just make this change here. I'm gonna throw this 50 in here. And my savings is a little down because something happened and I had to pull from my savings. So starting that over, that's life, it happens. So that's 45. For my emergency fund, I'm gonna do 50. And again, I'm not counting that yet. I'll be counting that later just because it is the end of the month and I will be doing my savings check-in, which I pull all of my $1 challenges, my $5 challenge money, as well as my rollover money, and I add that all up with my emergency fund savings, and we see how close I've gotten to making my goal of $1,000 for my emergency savings. So we have $50 for that, and I will color. Let me go ahead and color that now. Actually, I was supposed to put a picture in here, but I didn't. It's still my little bland. My little bland savings binder, and there we go. So the last 50, because then the last time I said I was going to do 40 because I thought I was finished, and then right when I was editing, I saw this big old 50 right here just staring me in my face. So we're gonna go ahead and do 50. Okay, so now that I've stuffed my emergency fund, we are going to move on with the month, I believe it's the month ahead fund. Actually, I don't know why I moved my thing, because I still want to stuff my Black Friday, and it's Black Friday in here. We're just gonna go ahead and do month ahead, because month ahead is gonna get 5. So $5 here, and I'm not even gonna count because it's nowhere near it, and I haven't like really had a thing. I haven't really set a goal. I need to actually write down the amount. I had it and added it up and put it somewhere and then lost it. So I need to re-add my amounts of how much I actually need when it comes to my bills and being a month ahead for that. And then I'm gonna make not necessarily a challenge, but at least I know where I'm aiming for. So $5 for the month ahead. And then self-care is going to get $10. Self-care is gonna get to, actually I have money in here, so self-care, stuck the 10 in here, so I have 15 as of now for self-care. I always open this backwards, so yeah, I need to put a cover on here just so I can have a front and back. And if you hear my dog, I'm sorry, just I don't know why, but she always chooses to walk when I'm recording. So here's 5 here. And 5 here. Oh, and do y'all, totally random, but do y'all see my nails? Do y'all like them? My sister treated me and got my nails done. We had like we had a sister date, and so got my nails done. I like them. It's been a while. Usually, it's been, when I tell you it's been a while, I usually would get, I think, stiletto nails, and I forgot. So when the lady was doing my nails, she's like, "What shape do you want?" I forgot which nail I used to like. It was like oval, I guess. I don't know. I don't remember. So now that I have them, it's like, oh, I remember. I like stilettos. So that'll probably be the next one I get. I did that. I did self-care, and then I did a month ahead, which is not on here. The next one is gonna be my Black Friday challenge. And for Black Friday, I am stuffing $40. So here's 20 and 40. And I believe Black Friday, I think I'm just stuffing that in my holiday envelope because I didn't really create a separate one for like Black Friday or Christmas. I'm just kind of putting them both together. Here we go. So here's 20, 30, 40, 50, 51, 52, 53, 54, 55. And I think I'm gonna use a different color. Where's the 40 here? Here we go. And y'all, I do have these on my Etsy shop, the Black Friday as well as my Christmas holiday savings challenge. If y'all want to take a look at it. Now, if I can get this turn. My Black Friday one will look better than this. My printer was running out of ink, so that's why mine's kind of looks stripy. I kind of like the look though, but originally the bag is all pink. Same thing with my self-care challenge, but I changed it up a little bit. It's a lot prettier than just this. I added some other stuff to it and made it prettier. But the way I have it is you can do the $5 challenge and you end up saving $120. You can do the $10 challenge and save $240. And then you can also add the 5 and the 10 together and save $15 for a total of $360. So go ahead and check that out. My Etsy store is called Abundant Budgeting, and my link is in the description. But for the last bit of the investor series is basically as talking about who can contribute to your child's IRA, like besides yourself. And it can be, you know, you. It can also be grandparents, and it can actually also be friends too. So the way you would contribute is like say for example, your child had a side hustle and they earned $3,000 like on a summer job or whatever, you can actually let them hold on to their money, and you can just go ahead and contribute your own money, your own $3,000 towards it. Like, let them spend the money that they earned, and then you go ahead and contribute. Or you can do a thing where you pay a percentage. So say your kid earned $3,000, then you would contribute 50%. So you would pay $1,500 towards that IRA account. Now do remember to there are gift tax rules when it comes to like the IRA. So the contributions you make towards that Roth IRA for your kid will count against the limit on tax-free gifts that you can make to one person. And I think that limit for the year 2022 is $16,000. And honestly, the IRS really does not care who makes the contribution as long as it doesn't exceed your child's earned income for that year. So again, if your child earned $3,000 at the summer job, then $3,000 is all you can invest in that IRA. And then there are some benefits to, having an IRA for your kid. It teaches them financial literacy, and then tangible uses of money. And the bottom line is the kid has a really great advantage when it comes to investing because of time. Because if you think about it, like for example, like I said, my child isn't even 2 yet. If I was to create a custodial account IRA for him, and like at 2, and he kept it until he was like 59 and a half, that compounding interest over time will go into overdrive. So the sooner you can open that account for your kid, the better it will be. And that's all I have for my custodial IRA investor talk for today. So we're just gonna finish up with my phone challenge, and I'm just gonna add $5 to it. Well, at least that's when it comes to my sinking funds. I'm just gonna do the last one, which is the phone challenge. And y'all, so let me see. Can y'all see? Do y'all see? Car maintenance is still there. It is still there because I went to go and get my my tires done. No one, absolutely no one, had my tires. Like, they didn't have my size in tires. Only like one place only had like one tire, and granted I could have gotten that one tire, but I want a pair. Like, I don't want to have to keep coming back every other Saturday just to get a different tire. So I'm waiting for someone to get like an actual pair. And so for the phone challenge, I am just gonna add 5. So that's 25, 26, 27, 28. And honestly, I don't think that's enough for me to color in another hexagon. So I'm just gonna leave it blank for now. And I believe that is all for this. No, it's not. I always forget, I wanna add my $1 and my $5 to the challenges. So I'm not even gonna count, I'm just gonna stuff this in here. And then I am going to stuff my $5 in here. Okay, now I am done. That's it. Finito. Done. All right, so that's all I have for today. So thank you guys so much for sitting through this investor series talk for the custodial IRA. Honestly, I think that may be all that I could think of when it comes to investor talk for investments. So if y'all have any more ideas or any type of investments that you want to learn about, hit me up in the comment section and let me know, and I'll go ahead and do that research and make a video about it. But thanks for sitting through this. hit that like and subscribe button, as well as that notification bell. So if this is what you're interested in, like learning more about investment talks, cash stuffing, savings challenges, I'm your girl. Abundant Mama out. Bye.